Namaskar, this is Akhilesh Bhargav. Welcome to Tit-Bits on Business and Finance with me. As the Indian economy continues to slow down consistently and considerably, so has been the case with bank lending in India. It has been slowing down in tandem. A recent report says that the bank lending growth rate in the current financial year 2020 is expected to dip to a 58-year low. The growth rate last year in bank loans was to the tune of 13.3%. It has fallen to 6.5% this year, which is a dip of 45% on a year-to-year basis. There are various reasons why there has been a dip in lending by banks in India. The fact that private sector investments have come to a near halt explains why they do not need to and they do not take bank loans at all. With the economy slowing down, there is bound to be a slowdown in the loans being taken. Consumption has been dipping. Corporates, which are stressed, are preferring to repair their balance sheets and deleverage rather than take more money. That explains the other reason why there is a dip in bank lending. The increase in retail household lending has not been enough to offset this sharp dip in borrowing by corporates and by the business sector, and thus the overall dip in lending. A managing director of State Bank of India says that because of the slowdown, there has been a dip in bank lending, and because of slowdown in consumption, he says, there has been a dip in working capital lending. Ironically, while giving of loans by banks has gone down, the giving of deposits by the household sector and the other sectors to the banks has not gone down. Deposits in banks continue to grow, and with loans not growing, bankers have been preferring to park their surplus money with the Reserve Bank of India. While on one hand, banks in India are unable to lend or are not lending to Indian corporates, on the other hand, a recent report says that Indian corporates have indulged in a record borrowing in overseas markets. Borrowings by Indian corporates this year so far have touched $30.25 billion, which is over 2,10,000 crores. That's the amount that they have been borrowing in markets overseas, and that's a record. The reason is that overseas markets are flush with funds, they are flush with low cost funds, and bankers are even facing a situation where they have a negative situation happening on the monies that are there around. In such a situation, bankers abroad are very happy to lend money to the Indian corporates and, of course, earn interest on their surplus funds. For Indian corporates, it means it has been a little easier borrowing abroad, and that too with a dip in the cost of borrowing. It's a win-win situation for them at the moment, despite the fact, something that we can't ignore is that in case there is a sudden appreciation in the dollar, in that case, the entire calculation that the Indian borrowers do of borrowing cheap abroad, they go awry. Suddenly you find that the cost of borrowing has shot up because the dollar has become expensive. But at the moment, everyone is a happy lot. The corporate is happy because he gets a low-cost fund, he gets it easier. The foreign bank is happy, they are able to deploy the funds, and in the result of that, the economy certainly has a better time because corporate performances will get better if they are able to borrow at better rates. When Indian corporates do not borrow from Indian banks and they go abroad and borrow, they actually deprive the banks in India of their domestic market. In the sense, the domestic banks are expected to lend to the domestic lenders, and by the foreign lenders lending to them, they are ceding their own market share. The question is that the risk profile of a borrower, the risk profile of a deteriorating economy continues to be the same, irrespective of the background and pedigree of a lender, whether it be a foreign lender or it be a domestic lender. When the risk profile is the same, then why is it that Indian lenders, Indian banks are not lending, are unable to lend, and because of that, it is the foreign banks which have made inroads into their domestic territory and the foreign banks are lending so copiously. The question is, why is the situation so different between these two banks, the domestic banks and the foreign banks, in the matter of lending to Indian corporates? The answers to us are many. The first one, according to us, banks and bankers in India are a scared lot. They are risk averse. They are repairing their own house, struggling to survive. Many banks had gone into bankruptcy and they have been revived through PCA. They have not yet become robust and in great shape. They have just come back to the surface because of capital infusion by the government. They are still not in a situation where they can get into a normal banking lending business. They continue to be risk averse because of the bankruptcy they faced. The foreign banks are not in such a situation. The second reason, banks in India do not have the kind of funds that foreign banks have at their disposal. Foreign banks are sloshed with funds, with low cost funds. Indian banks are not. And thus, in terms of sheer ability to compete, Indian banks are not able to compete with the kind of funds and the resources at the disposal of the foreign banks. That explains the increased lending by foreign banks to Indian corporates. The third one, banks in India still have a legacy of NPAs to battle. It is not over. They also have a legacy of mismanagement by virtue of interference by the netas and babus in their management. And that legacy still is a huge hurdle, obstacle for them to be able to lend in larger numbers. The next reason, project finance, lending for a longer duration, seems to be now history as far as Indian banks are concerned. Even a bank like ICICI Bank, which originally was meant to be a project finance lender, is said to have closed its project finance department. Indian banks are not willing to take long-term risks. They do not have that kind of an appetite in terms of longevity of funds to take it. And in that domain, foreign banks have been moving in very easily. At the moment, because of the stress in the banking and NBFC sector in particular, the banks in India face a plethora of RBI regulations and restrictions that also impede their lending business. Foreign banks are not subject to these kind of restrictions of the RBI in the overseas markets where Indian corporates are borrowing. That again is the reason why banks in India are not able to lend as much as the foreign banks do. With their deep pockets, with their aggressive lending, with their bigger appetite to lend, with their appetite to take long-term exposures to corporates, foreign banks are certainly in a better position today than banks in India. The other reason that we see, and it's a positive reason, why foreign banks are lending to Indian corporates is because it displays, when they lend to an Indian corporate, it displays their trust in the Indian corporate, in the Indian economy. It shows that they look at India from a long-term perspective and they are willing to take an exposure to the Indian economy. It also shows perhaps that foreign banks today have realized that green shoots of recovery should be imminent with all the kind of measures that the government is taking to revive the economy. And that perhaps explains why not only is the FDI stable and on a positive note into India, but when foreign capital comes in, so does foreign debt come in. And that's another reason why foreign banks continue to lend to Indian corporates in a rising number. In our opinion, this kind of an increased lending by the foreign banks to Indian corporates comes with some benefits. One is they take an exposure to India and continue to stand by it. The second is, if the dollar doesn't really suddenly depreciate, it provides low-cost funds to Indian corporates, helping them to restore their receding profitability. And of course, while the Indian banks are struggling and are not able to really lend, with the foreign banks stepping in, it does ensure that Indian corporates are not suffering for want of funds and supply of funds and liquidity to the economy continues. Because otherwise, the crisis in the economy would have been graver. So here we have a tale of two banks, foreign banks and domestic banks. Domestic banks not taking that kind of exposure to the Indian markets that foreign banks are doing, and that in the long run we think should be good for the Indian economy. This is Akhilesh Bhargav signing off till we meet again. Namaskar.